Hey guys, welcome to this week's episode of my crypto update. As you may have known, last week I was speaking at the Trader Expo and so was not able to make a video. I think I like to share one interesting tidbit about these conferences that I speak at. I can really track sentiment based on the crowds that we see. When I first started speaking after our 2017 top, 2018 early 2018 top. Those crowds were still standing room only. Sometimes I was speaking to over 150 to 200 people. As we got into the bear market, not only did I have the worst speaking slot because the demand for a crypto speaker was less just less demand there. I also would be speaking to no more than 30 people at a time. And we're finally starting to see the crowds build back up. Now, I don't think I'll be speaking to 150 to 200 people until the next major top. And sentiment is what guides markets. If everyone is bullish, markets tend to turn. When everyone starts to show up at conference talks, there's a little bit of a warning. So it's just an interesting tidbit that something I watch as we move along through this bull market is what are the crowds are in speaking events. As I'm talking about cryptos. But anyway, so let's move on. There's not too much to say regarding Bitcoin right now. As you know, I've been my primary here is that we are in a wave two, and right now, in the last week or so, I've changed my structure to a WXY. And I see us in the C of the Y wave. WXY is actually a very common structure for Bitcoin, but I never know exactly how it's going to form. So I finally have the first indication I can use to suggest that we are in a WXY. Another possibility is actually that we have a normal C wave and are going down in an ending diagonal. But I can say that WXY, even that's sort of an exotic structure from an Elliott wave perspective, is actually very, very common. In Bitcoin, in fact, you can even see a WXY back here for our wave 4, which is really just a combo that's 3 by 3 by 3 versus the standard 3 by 3 by 5 or 5 by 3 by 5. So just a different sort of structure in terms of the way it lays out. It also when we get to the bottom here, they tend to be quite sharp versus an ending diagonal on the C would be much more of a divergent bottom. You would see really the setup for reversal more clearly. And often when we get to the end of a WXY, we get a very sharp drop and very sharp reversal. And if you've been trading cryptos for a long time, you're very familiar with that ending to a correction. So we'll see. Some of the interesting tidbits on sentiment. I mean, we saw some decent lows in optics, which I use. I highly recommend it at sentimenttrader.com. Shout out to them to do really great work. I saw a relative low today, as well as the free fear and greed index that also actually had some quite low readings that would suggest maybe we get a bounce. We've got a small one. Optics itself was not at a statistical low for a correction, but it was at a low that can bring some sort of corrective bounce at least. And so we saw some of that this week. And as we zoom in here, I have an arrow here because I do think that there is a potential that this red B comes in more complex and higher. As of right now, I'm not quite sure as whether we are, the low reading in optics and fear and greed, maybe indicating that we get a stronger B wave up into there. But that said, I count 5 waves down, 3 wave up. So there's at least a really strong chance that we're headed back down in 3. So I'm sort of 80% looking down and giving a chance for up if we continue to rally here, but I don't think it'll get too far. So that's where I'm at on that. Another count that I want to bring to your attention, which I've shared with subscribers over the last few weeks, there are some indications that the internal structure of this is very triangle-like. It's a little early to say, but if we do end up in a triangle, that you can see the time frame. Since most subwaves of triangles are pretty evenly spaced, we could see a stretch out sideways for a couple of months. This being a B wave before we get a C wave down. So that's again not a typical structure in Bitcoin. Although we saw some triangles in the great bear market into the November high before we really dropped out. So it's somewhat similar to that, but this is a little bit different context and is really actually not that common. But it's something I'm watching for, as a lot of these subwaves have three. You can see we came down in three here, which indicates WXY or ending diagonal, but it may also indicate this triangle here. So just something to be ready for. I mean, patience, patience, patience. I think, as you know, as most of you know, have been with me in these YouTube drops for quite some time. I've also been ideally looking for that 30 RSI on the daily, which is often where the bull markets go for their ultimate bottoms and the corrections, and we're not quite there yet. Now, it's a little bit of a, honestly, a legalistic way of looking at the markets. I mean, we don't have to get 30, but I'm just saying that would be really quite ideal. But if we look at the RSI and the technicals right now, we've got some strong downtrending technicals. So there's no reason to say momentum is about to turn based on what the indicators are telling us here. They are squarely in looking at the downside. So more to come expected unless we eke out some sort of sideways action. There is, and honestly, let's look at sentiment and ask yourself, do you see real fear in this trade? Do you see the Twitter folks freaking out? Do you see the YouTube, the other YouTube, the larger YouTube crypto guys saying that we're gonna break this bull market? When you start seeing that happen, then you know that you have a really strong opportunity to buy, and we just don't see that sentiment. Really fearful at this point in time. So that's where I'm at with Bitcoin. One, the chart, the non-Bitcoin chart that I want to review today is, I just want to actually put out a strong warning on Ripple. Early on when I started these episodes, I went over Ripple because I had so many people wondering where Ripple was going, and I was one of the few bears in Ripple that I knew. But mainly I was saying that we had the formation of a triangle that could go sideways for at least another year. Well, since then, this triangle has broken down. If you look at this trend line and this trend line, let me turn these orange. These are the last remnants of our triangle, and I can't reliably say that we're going to hold inside that triangle. Instead, what I have is the early formations of an ending diagonal down, and right now, I at least seeing this eventually going to 10 cents. It's a little bit hard to believe where we're at right now, but this is just simply the way I see it. So it actually could offer a very good short as a hedge on a bull market in a portfolio. I would just advise, when you're in a bull market, even your shorts on something that's weak, don't make them so large that they will hurt your return in that bull market. Right now, Bitcoin is in such a strong move that staying long and adding to longs as we get deeper in this correction is just the smarter way to go. Putting a little short on Ripple to kind of hedge that position in Bitcoin can be quite smart. It's quite a weaker chart. Just don't keep it too large. So anyway, so what I'm seeing in Ripple right now is a breakdown of the triangle. You can see the orange lines here. I've changed them. That's their triangle. It's broken down, and now see us heading towards the 10-cent region. All right, guys, that's all I have for today. The correction continues. That's the bottom line. Preserving your capital is super important, and get ready to get that big buy opportunity showing up at the end of this wave 2. We're almost there. We're almost there in price. We'll see if we're almost there in time. Sometimes these corrections last a little bit longer. All right, guys, thanks a lot.